Are you in your 40s, living in Oklahoma, and worried you're going to work until you die? Well, me too. And here's exactly what I'm doing to get ahead. I'm 43 years old, and luckily we've worked really hard and we're relatively high income earners. So here's what my wife and I do to try to maximize every dollar so we're not working until we die. First off is taxes. Since we're high income earners, we have a relatively high ordinary income tax bracket. So every dollar we can save in taxes reduces how much we're spending and also increases our future net worth. So regarding taxes, some people say pay off your debt first, but actually the 401ks and IRAs are bankruptcy protected up to 1.5 million, and the best way to get ahead is to pay yourself first. So whether that's $1 of every paycheck or $10 or 10% or 30%, my advice is to always pay yourself first, especially in a tax qualified account, because that's going to add up over time. It also defers your income taxes for that year. Here's exactly what I do to get ahead. First of all, we're a relatively high income family. My wife's an attorney. I've been a financial advisor for two of the largest wealth management firms here in Tulsa, and now I started my own firm. I've been in business for about 15 years. So here's exactly what we do to get ahead. First of all, we try to mitigate our tax expense. So for example, let's say we make $200,000 a year. We want to put as much money we can into qualified tax deferment vehicles, such as an IRA or a 401k or a 503b, or whatever that situation and whatever tax codes are available for you. You should help invest money there first to maximize every dollar. Of course, some 401k plans and companies match your tax dollars, so that goes even further. But for this case, let's say we make $200,000 a year and we max out our 401ks at roughly $20,000 a year. Well, what that does is it lowers our taxable income to $160,000 a year. So now we've lowered our taxable income and we're saving about 30% on $40,000, which turns into $24,000 a year. That's $24,000 a year we didn't give to the government that we get to keep for our future selves. So if we compound that out, say I just put $24,000 this year in tax savings for me and my wife into the stock market. I'm 43 years old. I'll leave it there for 22 years until I'm 65. That actually turns into $165,000. I've now matched my current year's income for my future self simply by saving about 20% of my income into a tax-deferred vehicle.